What's something people don't know about loans for the self-employed? These are special types of loans that don't require the usual mountain of paperwork. These loans are great for folks like freelancers, contractors, and small business owners. This includes people who often find it challenging to provide traditional income documentation. You see, with regular loans, you need lots of paperwork. This can be a huge hurdle for those who work for themselves. Pay stubs, tax returns, the whole 9 yards. All these documents are typically required to prove your income. But what if you don't have those traditional documents? What if your income is irregular or varies from month to month? That's where no-doc loans come in handy. They simplify the process by focusing on other factors. No-doc loans are designed for people who don't fit the traditional borrowing mold. They offer flexibility and ease. They offer a way to get funding based on your creditworthiness and financial health, even without stacks of paperwork. This can be a game changer for many. It's about time someone recognized the hard work you do. No-doc loans can provide the financial support you need to keep your business thriving. Now, let's talk about traditional loans for a minute. They can be a real pain, especially if you're self-employed. Banks and lenders love their paperwork. They want to see proof of your income, your employment history, and more. But as a self-employed individual, your income might fluctuate. You might have gaps in your work history. This can make it hard to get approved for a traditional loan. And even if you do get approved, the process can be long and stressful. You might have to jump through hoops and provide endless documentation. Who has time for that? Just like with regular loans, there are different types of no-doc loans. These loans are designed for people who may not have the traditional documentation that most lenders require. They offer flexibility but come with their own set of rules and conditions. One type is a stated income loan. This type of loan allows you to simply state your income without providing the usual proof like pay stubs or tax returns. With this loan, you tell the lender how much you make, and they take your word for it. It's a good option if you have a high income, but lack the documentation to prove it. Another type is a bank statement loan. This loan is ideal for self-employed individuals or business owners who have irregular income. Here, the lender looks at your bank statements to verify your income. They usually require 12 to 24 months of statements to get a clear picture of your financial health. No need for tax returns or pay stubs. This can be a huge relief for those who have complicated tax situations or who don't receive regular paychecks. Now, it's important to remember that no-doc loans often come with higher interest rates. This is because the lender is taking on more risk by not requiring traditional documentation. This is because they are considered riskier for lenders. Higher interest rates help to offset this risk. But if you're self-employed and need funding, they can be a lifesaver. These loans provide an opportunity to secure financing when traditional loans are not an option. Section 4. Dotting the I's and crossing the T's, understanding the fine print. Before you jump into a no-doc loan, there are a few things to keep in mind. First, make sure you understand the terms and conditions of the loan. Read the fine print. Second, shop around and compare rates from different lenders. Don't just settle for the first loan you find. And finally, be prepared to make a larger down payment. No-doc loans often require a higher down payment than traditional loans. Section 5. A lifeline for many, the impact of no-doc loans. No-doc loans have been a game changer for many self-employed individuals and small business owners. These loans, which require minimal documentation, have opened doors that were previously closed to those without traditional income verification. They've provided access to capital that would otherwise be out of reach. This has been particularly beneficial for those who have fluctuating incomes or non-traditional revenue streams. Did you know that nearly 10% of all mortgages originated in 2024 were non-qualified mortgages, a category that includes no-doc loans? This statistic highlights the growing acceptance and reliance on these types of loans in the financial market. That's a significant number of people who are benefiting from this type of lending. It shows how no-doc loans are filling a crucial gap in the lending landscape. These loans have allowed entrepreneurs to start businesses, expand their operations, and achieve their financial goals. By providing the necessary funds, no-doc loans have empowered many to turn their dreams into reality. They've also helped families purchase homes and secure their financial futures. The impact of no-doc loans extends beyond just financial assistance. It offers hope and opportunities for a better life. Section 6. No-doc loans. A practical solution for today's borrowers. So, there you have it. No-doc loans. A practical solution for today's borrowers, especially those who are self-employed. They offer a way to access funding without the hassle of traditional loans. Just remember to do your homework, understand the terms, and borrow responsibly. And always remember, the best loan is the one that fits your needs and helps you achieve your financial goals.